Ladies and gentlemen, welcome back to the channel. This one is going to be exciting. If you can't tell by the title of this video, we're going to be going over can or will AMC squeeze in January? What is my personal opinion on this? And there's a couple factors that you have to consider, and we're going to look at the historical performance of AMC stock compared to the short interest, meaning where was the short interest in January of 2021 when AMC squeezed the first time? Where was it in June of 2021 when AMC 10x'd in value, and where is it currently compared to the share price? We're going to look at the technicals as well, because we're setting up almost the exact same way as we did before both of those last major rallies. And I think really the cherry on top is going to be AMC earnings, and we're going to go over this article that explains how AMC potentially is going to report free cash flow positive numbers. And what that means for AMC is it becomes a little bit more investable. They are not burning through cash. They can actually start to accumulate some cash in the bank. And that is really what stocks have been trading on throughout all of 2022 is, are you profitable or not? And AMC might just get that free cash flow positive narrative in this next upcoming quarter, guys, or the quarter that just passed, but the quarter we're going to get reported for. So we got a jam-packed video. We got a lot to cover in a very short amount of time. Hit that like button and subscribe to the channel. Help push this video out to as many people as possible, because keep in mind, I'm not a financial advisor. I'm not a financial planner. Come to your own conclusions. All of this could be BS, and you could lose all of your money, right? AMC could go to zero tomorrow if they announce bankruptcy. Anything is possible, or it could squeeze tomorrow, and whoever's watching this video could get insanely rich. You don't know, so do your due diligence, come to your own conclusions, know the risk when you are investing your own hard-earned dollars. But the more people that do push out this narrative and spread this information that is all public information, you could say the greater likelihood of actually seeing some kind of squeeze. So let's get into this video, guys. First things first, I want to talk about the technicals, but before we do that, I want to look at where the short interest is compared to where it was during previous rallies, because like I said, the technicals look remarkably similar to what you've seen in January and what you've seen in June, and you're actually at the same exact levels right now as you were then, guys. So with this is Ortex, obviously, as you guys know, but this green line is the cost to borrow rates. And you're going to see the estimated short interest of free flow. Actually, this is the exchange reported short interest of free flow. And it gets a little bit tricky just because how Ortex has it put out. But if you look at this green line, that is the cost to borrow rate. So that is very important to the story of AMC. One, because when the cost to borrow rate goes higher, it makes all existing short positions more expensive. It's basically like a huge incentive to get out of your short position, especially because if cost to borrow rates are this high right now, where do you think they're going to go when AMC actually does start to ramp up in price? That's where you could see your cost borrow rates, or the amount you're paying for your short positions, go up 10, 20, 30x, and you become massively underwater on your positions. At the same time, AMC share price is going up, and you're losing on that side as well. Now, take a look at this green line. What do you notice about this green line? That is the cost to borrow rates. Well, ever since, what was this, June of 2019, cost to borrow rates slowly started to rise on AMC, and then they really started to get some steam towards 2020, right? Once you got after 2020, especially into August, September, November, December, that's where things started to ramp up quite a bit. And then what happened? You got the first rally in January, and that looks tiny compared to the June rally. And then cost to borrow rates fell off a cliff. They went from 153% down to about 29%, down to 3% at some points after the January rally, whereas the stock held up. The stock didn't completely crater, it held a premium to it. And then we'll talk about this more once we get to the technicals. The stock did start to go higher to this key level that we're going to talk about on the technicals, found a lot of support and then rallied in June. But what happened with the cost to borrow rates? Well, the cost to borrow rates started to spike before this June rally. They started to spike in about April. So you had April, May, and then June started to roll around, and that's where you got the big rally. And then what happened? Cost to borrow rates basically plummeted down to, this is saying 1%, 4%, 5%, and then they started to ramp up again around July of 2022. And then you did see another rally in August, right? That was a pretty aggressive rally from like $9 to $16 or $8 to $16. We'll talk about it again when we get to the technicals, and we're going to make all of this make sense. So stay tuned for all of it. Now, you've seen the cost of borrow rate go down a little bit after that August rally, and ever since then, the cost to borrow rate has been going up exponentially. So you are almost at the same exact level that you were at before you ever seen a rally with AMC. Before that January rally, you're higher than where we were before the June rally. And comparables here, keep in mind, even after the split adjusted prices and the change that causes to the actual charts, you're at the same level you were before the June rally. So like, yeah, the share price might be a little bit lower than where it was then, but on the split adjusted basis, the actual chart is at the same exact level that it has been at or was at before that June rally. And you can see cost of borrow rates now currently, as far as this chart, gives us 153.79%, which is higher than it's 52.99% that you've seen on December 21st, 2020, before that January rally. So you're breaking out as far as the cost to borrow rates are concerned. And I think if you were going to see cost to borrow rates actually go down, it probably would have been when AMC was hitting the low at $3.77 just a couple of weeks ago. That did not happen. Cost of borrow rates continued to go higher. And the damn cat was opening and closing the cupboard, slamming it shut, so I had to remove him from that situation. Hopefully that didn't scare you guys too much. I know it is kind of loud coming through on the mic. But nonetheless, guys, even the short interest is at a high for 2022, higher than the levels you've seen in June. And you actually, interesting enough, seen the short interest fall from 67% all the way down to about 22% before that first January rally. And then the June rally, the short interest was only at about, let's go ahead and see where it has us pulled up at, about 21%. This was on April 26th. So right before that June rally, even throughout May, the short interest was like 22%. So you're at those levels, if not higher than those levels that we've seen before the June rally. So on a cost to borrow rate, you're, better looking than you were before these other two rallies. On a short interest basis, you're similar, very comparable to where you were in June. I would argue, given the manipulation that we have seen since then, you're probably a lot better off now as far as the amount of shares currently sold short, where they are in dark pools or hidden in the option activity. That's a key that we've talked about in a couple videos now. We might highlight that here in this video as well. Actually, we will, because that will pertain to a potential MOAS or short squeeze with AMC in the month of January. If not, it could actually happen in the month of February as well. A big portion of this is going to come down to earnings, and that's the free cash flow narrative. Once you actually see that free cash flow positive number from AMC, that's where things will get very interesting, because at that point, AMC is no longer destined for bankruptcy, especially considering 2023. People think the box office is going to be better in 2023 than 2022. So that means AMC should post better numbers in 2023 than 2022. It really just completely crushes that AMC is going bankrupt narrative. Now, this article is older. It's from November 21st, but it highlights exactly what we're talking about. And specifically about fourth quarter earnings that we're going to get reported on over the next couple of weeks. It says, AMC, will the last bear kindly leave the theater? The summary: AMC's fourth quarter is set to be strong, with the new Black Panther and Avatar set for a strong box office. The company's third quarter earnings outperformed expectations but suffered from a quiet movie slate. Liquidity remains strong at $900 million, with management expecting positive operating cash flows for the final quarter of the year. If that happens, I think you're going to see AMC shorts scramble for the door. And I think you might see a ramp up into earnings in anticipation of this free cash flow number. Now, if AMC botches it, if they spent too much money and their operations were not profitable, or at least not free cash flow positive, that's going to be an issue. I think that is the single thing that could derail a potential short squeeze from here. If we take a look at the technicals and just kind of reiterate what we were looking at on the chart, we're at the same level that we were before the June rally. And even back here during the January rally, you bottomed roughly at the same bottom of after this squeeze. And I think that is statistically important because we're not controlling AMC's share price at this current moment. Until shorts are forced to cover and we're not selling our shares, that's when we control the price of the stock a lot more. But as of right now, it's really trading algorithms, right? And when the algorithms are finding support at key levels that we've seen years ago at this point, after major short squeezes, that's something to pay attention to. So you bottomed at $3.77. You're now sitting at $5.46 per share. You're up like 70% from the lows already. And where we're currently at is you're finding support at this level right here at about $5 per share, roughly, what is that? Roughly $5 to $5.20 per share, where AMC actually rallied after the January short squeeze and then subsequently rallied into the June short squeeze. You're bottoming out in the same way that you did before June. What is also happening is you're almost faced with this downtrending level of resistance. We've seen this get touched and rejected on 1, 2, 3, 4, 5 times now, and you're heading back up to that level, and I think you're going to approach that level very, very shortly, and that is this line right here. By the time we do approach it, it might be around like $6.60 per share. If you break above that level, you're going to go from a prolonged downtrend into an uptrend. That is going to be a positive reversal. Mix other factors in, like potentially free cash flow positive numbers from AMC on earnings, the short interest being at the same levels it was back in June of 2021 and January of 2021. Kind of the risk of bankruptcy going away, and a very strong technical picture, cost to borrow rates that are sky high, higher than they were even before those last rallies, right, in January and in June. You could start to see how this short squeeze could rapidly evolve into something very positive for AMC shareholders, guys. And all of this is public information, and I will give you the disclaimer again. I do think earnings will be a big key to this. If AMC botches earnings and they don't get free cash flow positive even after Avatar and Black Panther and the multiple other movies that went to theaters, you're going to have a problem. And at that point, you're probably not going to see this squeeze. I would go out as far as to say you won't see this squeeze, because that's what the markets have been trading off of. Companies that are free cash flow positive, that are making money, or at least supporting their operations, right? They're not just losing money being open. Obviously, EBITDA is a different story. We can get into that in another video. We're not going to do that now. But if that does not happen, it's not going to be rewarded for that. Companies that are going from losing money to making money are massively rewarded in this current market environment, and it totally changes the dynamic of shorting AMC. A lot of people with shorts on AMC, either it's a pride and ego kind of thing, and I think it's about 50-50, or you got the people that really think AMC is going to go bankrupt, that streaming is going to take over, and that AMC never ever will make a profit again or become free cash flow positive. So I think if those things happen, it's going to be insanely bullish. And where another short squeeze could take us, I think could be a lot higher than the split adjusted price of $44.61. I think you could 10x from here, easily go to 50, if not higher. It will all depend on option activity. It will all depend on if shorts are actually covering, because keep in mind, during the June rally, the short interest went from 22% to 14%. It's not like shorts massively ran for the door, right? They didn't. Obviously, we know what happened. Robinhood did what they did. Other brokerages did what they did. That's a kind of different situation. That wouldn't happen again. So mix all of this together. And I know this video was kind of sporadic. I'm trying to get this information out to you guys because I'm liking what I'm seeing. When you put it all together, it's going to make for a very interesting, if not massively bullish, January and or February. AMC's numbers are set to be released in early February. So we'll see the time frame on this. I think a rally could theoretically start in January, and you could see, kind of like we seen last time in June, a ramp up into earnings, and earnings could be the blow off top kind of catalyst for AMC, guys. Now, before we do go ahead and wrap up this video in its entirety, let's go ahead and take a look at the live short interest numbers, the live cost to borrow rates that we are currently seeing, guys. So live short interest of free float is 21.74%. Again, at those record levels that we have seen over the past 2 years with AMC. 112 million shares that are sold short. Cost to borrow average 256.83%, cost to borrow max of 327.96%, cost to borrow minimum of 84.62%. Even when we look on Interactive Brokers short availability, cost to borrow rates 97.2%. So even if you took out a short position when the cost to borrow rates were 20%, you're starting to feel the pinch of these ever increasing costs to borrow rates, guys. So that is it for this video. Hit that like button and subscribe to the channel if you learned anything at all in this video. Thank you for doing that, and I will see you in the next one.